Morning. Good morning. This is Jack from Charting the Markets, and this is the pre-market webinar for the morning of Tuesday, the 28th of April. My disclaimer: I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer it to your own charts, and I'm not here to issue trading signals. This is a video for paying subscribers at chartingthemarkets.substack.com. It's published on YouTube after a delay of 24 hours. All right, just to mention, I've got a post out this morning. With some fairly blue sky stuff. One, some potential targets to the upside, and two, talking more about the potential collapse to the downside that we may be seeing within weeks because the Strait of Hormuz has now been closed for 2 months. We shall see how that goes, but I'm going to be having a follow-up post with more short-term stuff out in a couple of days. And I've got a big post on bonds which I want to get out this week as well. Okay, looking at ES, we're seeing a bit of a decline this morning. We've broken the rising support trend line, which was not a three-point rising support trend line. I'm expecting to see some back and forth here. At the moment, there's not much indication that this is anything other than a little bit of a pullback before we go higher still. We shall see. But at some stage in the next few weeks, that's likely to end. But I was talking in my post about when the rubber meets the road, which is that when the forecast is that by the 10th of May, we will have run out of, the stuff that was on the sea before, when the Strait of Hormuz was closed, and the reserves which have been released, strategic reserves by many countries. And the estimate is that we'll have run out of all of that pretty much by the 10th of May or thereabouts. After that, unless more is released or more is eased into the market, and even if the Strait of Hormuz is open, because of course it takes a while for tankers to reach their destination after passing the Strait of Hormuz, if they're able to do so, then we're going to begin a process of price discovery, or as it is also known, demand destruction. And that, and what we are discovering there is the price at which enough demand is destroyed to balance supply and demand, and that would probably involve really the price going up enough to reduce demand by about 10 or more million barrels a day. That's a lot. And prices may well, I'd be thinking all-time highs on oil, and I'd be thinking we may make all-time highs adjusted for inflation on oil as well, which would be up at about the 225 area or more. That is a very, very big gap to fill, and an awful lot of energy requirements are fairly inelastic to price, so in that case prices can go up a lot. We shall see. All right, NQ, and I'm sorry to keep talking about potential large downsides here, but I'm just trying to warn you guys that this we've seen variants of this movie before, and the market does not tend to be the first to these realizations. It tends to be the last, and I provided an example of that happening in the pandemic. All right, on terms of NQ, we're seeing a bit of a decline here again, not really breaking anything insignificant in terms of trend lines. RTY, we had a sell signal, and that finally made the full target. This kind of looks like a bull flag forming. YM kind of looks like a bull flag forming. DAX kind of looks like a bull flag forming. ESTX kind of looks like a bull flag forming. Nikkei, possible topping action. Certainly not a bull flag forming, making higher highs, as we have been with NQ and with ES. All right, let's have a look at the bigger picture charts. Now here, I posted a couple of charts this morning, and this is just in case the level of delusion is high enough to get us up to some really nice trendline targets. This is the trendline target on the SPX weekly chart, and I was talking about that being at about the 73.60 area, but of course it is rising. So the longer it takes, but I'm thinking that if we are going to make these targets, and rationally I don't think we should, but irrationally, if these targets are on the table, I'd really be expecting these be reached in maximum a couple of weeks, because at some stage reality is going to start to bite. And reality is not looking particularly friendly for equities for the rest of the year unless something really big changes soon. All right, looking at Qs. Qs, I've got another megaphone, I've got another target, and I've got that in about the 680 area. Might be a little higher actually, maybe 685, but we will see how that goes. I'm liking this upside. And we've got a lot of earnings this week on tech. We've got FOMC. There will be much neutral talk about how things aren't that bad, and maybe that can push this up to the over the last section. I'm thinking actually looking more like the 690 area, not the 680 I put in the webinar, sorry, in the post. So we shall see how that goes, but I'm thinking that is potentially doable. All right, in terms of the other charts, we're not seeing an awful lot on the 15-minute charts. This is one reason I've been saying that, of course, generally speaking, if I don't have any decent patterns, then we're going to go up. That's not always going to be the case. Sometimes that can be overridden by news, but we've now got a possible full-size RSI 5 sell signal brewing on SPX, not because we've gone up a great deal more, and not because actually we've made a new all-time high, just because this is now looking like a distinct. I like to see the second high actually be distinct as a high. So this is now looking like a pretty good looking daily sell signal. On the hourly chart, nothing to see. Could this still be a double top? Yes. Equally, it could be a part formed head and shoulders. Looking at the cues, we've now got possible weak RSI 5 sell signal brewing. Again, looks pretty good. It's a weak one because we didn't make it back to the 70 level. But nonetheless, looking pretty good. This has been a hell of a run, and it's not necessarily finished yet. Although, obviously, in my view, this is irrational. So really, if people wake up and smell the coffee, they could end at any time. But people often don't wake up and smell the coffee. So we'll see. All right, we've got a weak RSI 14 sell signal fixed on the hourly chart, and we've got a possible full-size RSI 14 sell signal brewing. Not a lot to see on the 15-minute. But we've actually got a little RSI 5 sell signal brewing, but it's mainly the RSI 14s that I look at on the hourly chart. In terms of dia, we've actually already got a weak RSI 5 sell signal fixed. If we see a retest of this high, and I'm thinking we could get a full size RSI 5 sell signal brewing here. That's what I would like to see. And also, if possible, I'd like to see a retest of this high, because that could give us a nice looking double top. Whereas at the moment, we'd have an impressively poor quality head and shoulders here. Ugly. Really, I'd like to see another leg up, which takes us up into a retest this high, if it is possible to see that. We've got an RSI 14 sell signal fixed already on the hourly. Not a great deal to see on the 15-minute chart, apart from this looking currently like a bull flag for me. All right, let's have a look at these on the on IWM, and on IWM
we have a sideways move at the moment. We haven't retested the high, but as and when we do, I'd class this as a full possible RSI 5 sell signal brewing. I think it got close enough to the 70 for that, and certainly the first high was over 90. So the difference between the two is substantial. I'd like to see this high at 279.79 retested, just to set up that divergence. On the hourly chart, we've got an RSI 14 sell signal fixed, and we've got a possible bull flag forming. All right, looking at DAX. DAX, we've got, looks like a bull flag coming back in, back testing the 200 DMA, pretty close to a test of the 50 DMA. No current divergence on the RSI 5, and we're not going to get any because we're already below the 50 level. I'd quite like to see a retest of this high in any case, set up a little level top, and potentially a move up into 25.5k, but I'm skeptical about getting that, maybe. In terms of Nikkei, we went to the high yesterday. We've already got an RSI 5 sell signal fixed on the daily, but we haven't got the support from the others yet. But it is building. Divergence is building. Now, the last lot of divergence, we were trending up and we went straight through it. This I think, will probably be different, but we will see. But at the moment, Nikkei is still going up with some determination. ES has been doing the same. Qs have been doing the same. And it's not an accident that the upside targets that I've been looking at are on SPX and Qs. I'm doubtful about seeing a lot more progress on IWM or DIA. All right, great. Let's have a look at DX. Now, DX has, obviously, we've been seeing oil prices go up considerably overnight. And that, I'm going to talk more about that, because I'm sure, one, I'm a little surprised they haven't gone up more. Two, I'm a bit surprised there hasn't been a reaction from equities yet. But we'll see how that goes. In the meantime, though, when oil goes up, dollar tends to go up too. And it's doing that. It hasn't got anywhere close to a stage where I'm thinking this double top is failing. But we are looking at the monthly pivot, although of course it's only the monthly pivot for another 2 days. We get new monthly pivots on Friday morning. Looking at the other currencies, UUSD still got an IHS, which may play out. We've got a possible 60-minute buy signal brewing here. We had a sell signal here on GBP, and that's now made the target. USD JPY, not really doing anything particularly. USD CAD, I'm wondering if this might be giving us a double bottom here to start a decent rally on USD CAD, and not a lot to see really on Australian dollar or NZ. All right, looking at ZB, when oil has been going up, bonds have been going down, and bonds are going down. I'm going to be doing a big post about this in the next couple of days. It's going to take a while to write. I'll probably spend much of today writing it, but talking about how much I think bonds could go down, which is an awful lot. I mean, back below 100, 80, 90, 80 maybe, a long way down. But at the moment, I'm just really looking for this to reverse into a retest of this low here in about the 111, would that be? Yeah, 111.20 area approximately, and probably continuation down from there. This could be a bear flag breaking down, but it's not well formed. On ZN, we've got a nice looking bear flag, and which has broken down, and I'm leaning towards that, heading down towards the target. In terms of the oil charts, now here on this contract, obviously, we started off looking at the May for this, and that went up to about 119.50, I think. But on this contract, this is actually the highest this has reached during this crisis. And this was actually the decline a couple of Fridays ago, and that was a large decline that's been much more than given back. We had a 60-minute sell signal fixed here. Sorry, I haven't changed the arrow here. And that failed, and we've got another possible one brewing. We could see some more downside on here, but I think while the stretch formula remains closed, there's only really one overall direction this is likely to be having it. In terms of CL, not reached a new high on this contract for this crisis, but this does look kind of like a bull flag triangle forming, and I'm expecting this. I think this is a consolidation before this goes to the upside. HO, again, thinking about heading back and making a new crisis high. RBOB has already made a new crisis high. This is actually at all-time highs at the moment. We've got a 60-minute sell signal fixed, but we'll see how that goes. In terms of NG, possible double bottom here. I am thinking this is a nice setup to see a bit more of a rally here. Don't seem to have an awful lot of interested buyers so far, but I am wondering about a rally back up into the 3 to 310 to 15 area. Looking at GC, GC, now this is interesting. I haven't marked this up yet, but of course this is a double top, which is breaking down. I have been talking about the possibility we might see some more downside here. This has got a target, which would be in about the 43.50 area, I think. Could, of course, be heading back into a retest of this low, but I'm not seeing a huge amount of support for that at the moment, maybe. SI, this looks like a bear flag, which has broken down. Do we have a pattern here? Not yet, but if we see a bit of a rally today, we could be forming a right shoulder on a pretty decent looking head and shoulders. We've got a 60-minute buy signal fix. Might be. We'll see that play out today. Palladium. Palladium, this kind of looks like a bear flag, although it's more of an artist's impression than a real bull flag, really. But I think this looks like a bearish flag, bear flag, and a bearish consolidation. We've got a 60-minute buy signal fix that could be about to deliver something on platinum. Looks like a bear flag that's broken down. No obvious pattern here at the moment, but again, if you saw a right shoulder bounce here, coming up to, let's say, the 20-30 area, then that could deliver a pretty nice looking head and shoulder, right shoulder. In terms of HG, we've got another little double top, which has broken down. I haven't marked up the targets yet, but I'd have these at about the 577 area, I think. I'll have that marked up by the time I have these posted this morning. All right, other commodities. KC still looks like a bear flag forming. Sugar. I'm wondering about an IHS here. I marked this up as a possibility in the charts last night. If we were to see a sustained break up over this resistance here at about the 1430 area, then this would have a target at slightly above where the monthly pivot is at the moment, but won't be by the time it's reached in all probability. Maybe the 1530 area. In terms of CC, this still looks like a perfect bear flag channel.
In due course, we should be going back and retesting this low. On CT, looks like a bullish consolidation to me. 60-minute buy signals reached possible near miss target. Lumber, 60-minute buy signal and a potential double bottom set up. On ZW, we have seen a breakaway to the upside. I think this is the start. This should be the start of a serious move to the upside on grains, which is the one I was writing about last week. Corn, we're seeing a more modest break to the upside, but we have thoroughly killed this possible bear flag setup I had working. So I'm liking the upside here. We will see how that goes. Could this be an inverted head and shoulders here? It's not a good quality one. I really don't like it when we've got a prior low which is below the right shoulder low. That's the only real weakness with this one, but it is a significant weakness. So I'm not seeing a decent looking pattern here yet, but I think this could be the start of a breakup anyway. ZS, I'm thinking we're forming the right shoulder on an inverted head and shoulders, and we're waiting for a breakup. Monthly pivot is resistance, below only resistance for a couple more days, of course. ZL looks like bullish consolidation for a continuous higher. Live cattle, this looks as though it's heading back up into the retest of the high. There, we've got an inflection point where that could be the second high of a double top, or we could break down. On HE, I'm hoping that we're putting in a low here, because otherwise I think we might be heading back to the prior low, which wasn't what I was expecting at all. We will see how that develops, but I'm liking the upside here cautiously. All right, great. Let's have a quick look at questions. All right, great. In that case, no questions. I think that's a wrap. Everyone take care, and I'll have the morning stuff out as soon as possible. I do have this post out. Have a read, and I'll catch you guys tomorrow. All right, cheers.